And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts. Presented by RIA Advisors.
And good morning and welcome to the show. It's a brand new week as we also start a brand new month. It's the first trading day of February, which tends to be one of the weaker months of the year, by the way. But most importantly, it's generally the last half of the month that tends to be weaker in February, but apparently it's going to start out in the first of the month today. We'll get into the reasons for that, why here in just a second. But a few things going on this week, of course. We've got employment report on Friday. Of course, the Fed will be watching that closely after their latest meeting. A fairly long break. It's really not. It's every 6 weeks. But we won't have the next Fed meeting until March. So we'll have this employment report in the books and the next employment report in the books before the next Fed meeting. So we'll have 2 employment reports along the way and another CPI report. So again, there's going to be a good bit of data before the next Fed meeting. But on Friday, we've got the employment report. Also, Google and Amazon report this week, Palantir, Eli Lilly. So a lot of big companies. We're still right in the midst of very, very busy earnings season this week. So again, but this is going to wrap it up. So once we get through the end of this week, that's about 80% of all companies reporting, which also will lead back to the full reopening by the middle of February. We'll have the full reopening of the buyback window for corporations so they can come back to start buying back stock. That's already happening now. That window's slowly opening as a company reports, their window opens. But after this week, we'll have a big swath of companies reporting this week. And that's going to open that window for more buybacks starting about the middle of February. So that'll help give the market some support, which we may need because, of course, what happened over the weekend, just Why they do it over the weekend, I don't know. But, I'm writing the newsletter, and then right in the middle of writing the newsletter, we get tariffs, right? So we'll address the tariffs in tomorrow's article. In particular, I'm going to go through it. I've already wrote an article for tomorrow. Got to scrap it, rewrite it for tomorrow. Same as last week. It's been kind of a run lately, but tomorrow I'll do a complete article on tariffs, kind of what to expect, what the impacts are. These may be fairly short-lived. Okay, so if you don't know, right? So let me tell you what happened over the weekend. If you don't know, President Trump announced that starting tomorrow there will be 25% tariffs on both Canada and Mexico, a 10% tariff on China. Now, the tariffs on Canada and Mexico are on products, 10% tariff on oil. So there's a reduction on the oil tariffs there, and we're a very large importer of Canadian oil. Now, this obviously has markets certainly in a bit of turmoil this morning. We'll go through that in just a minute. But two things to really come out of this. Now, again, depending on who you read, you're going to get a lot of different headlines. So if you're reading really people that are very bearish, you're going to get very bearish stuff out of this. If you read people that are super bullish, you'll get some bullish stuff out of this. But there's good and bad on both sides of these. So first of all, the difference between now and 2017 when he enacted tariffs last time is that we did tax cuts first, which gave a relief to consumers, and then we did tariffs. We didn't do that this time. We put tariffs before tax cuts. So again, there's a lot of proposals for tax cuts. No taxes on Social Security, no tax on tips, no tax on other stuff, no tax on overtime. That's great, but we don't have that done yet. So that relief to potentially higher prices on things from Canada and Mexico, and again, they make up about $1.4 trillion worth of goods that we deal with. That's about 5% of the overall economy. So it's not huge, but it's not minute either. I mean, it's going to have an impact. So there's not an offset yet. Now, the one thing about this is assuming, this is the assumption. So if you read really bearish stuff, the assumption is that these tariffs are going to just lead to massive inflation and, it's going to be all kinds of problems, et cetera. And that could be the case if companies can pass on those tariffs. Now, we're going to talk a lot more about this morning, but we'll just highlights here. The other side of this, of course, is that tariffs may be very short-lived. So again, the reason that the tariffs are being introduced, simply trying to apply pressure. We talked about stick and carrot. We'll get into some more of that in the next segment here as well. We'll talk about it more in detail. But right now, the markets are got caught a little bit off guard. Again, we talk about these unexpected exogenous events. We had DeepSeek last week. We've got last Monday. We've got tariffs today. Monday's just getting to be a really bad day for the markets. So we'll see how this goes. But let's kind of run through a few things here. Here's what you need to know before the bell about tariffs. Markets have been doing okay here as of late, and again, not The big thing is that markets have been really in a very big trading range now for really the last couple of months. Had this kind of sell-off in December, early January, market rallied back post the inauguration, got back to overbought levels. And so then we've had DeepSeek and now tariffs pulling the market back. Market's going to open right around, a little bit below the 50-day to 20-day moving average. We'll see if the markets can kind of rally back. This is kind of that knee-jerk open. What we're going to be looking for this morning is see if the market can find some support here, start to try to process what the market thinks about these tariffs and what the impacts are going to be, and see where the market kind of stabilizes today. If we start taking out major levels of support, again, there's a bit of a reduction here that we could go through and come back down to retest the 100-day moving average, kind of like we did back in December and early January. We could have that same type of pullback here. Again, that would be 2-3%, and we'll see how the markets react. But again, markets already starting to work off that overbought condition, starting on Friday with that little bit of sell-off we had when really this was kind of first announced, kind of mid-afternoon on Friday. And we're very close to triggering a sell signal. So again, a bit more selling pressure in the markets. We're going to get a sell signal that could push markets down. Right now, markets are just really kind of in this big consolidation range. And so far, there's not any reason to be overly concerned about things because we really haven't done much except just kind of trade within this big band. So as long as we kind of stay in this band, there's not a whole lot to worry about. Again, it can be volatile. And we're going to certainly see that today in particular as we'll see volatility pick up. In fact, we've got a fairly large jump in volatility this morning, but starting to show back up. And again, we had volatility spiked up, on DeepSeek. We'll immediately reverse that. Now we're getting this spike in volatility this morning. We've had more and more of these as of late. So we're starting to see volatility pick up. We had a very quiet market last year as markets were rallying, not a lot of volatility. Starting to see a bit more of that, and volatility is actually going on to a buy signal here. So again, this could translate into a bit more rise in volatility here in the short term, a little bit more turmoil as markets continue to try to process what the impact of tariffs are going to be on the overall market. The other big winner today, I shouldn't say winner, but it's one of the other big impacts is the dollar. The tariffs, of course, dragging more reserves into the U.S. dollar to try to avoid the impact of tariffs, currency exchanges, etc. So if I'm a foreign country and I've got exposure in my reserves to the U.S. dollar, I can buy the U.S. dollar to offset that. So we're seeing money flows into the U.S. dollar fairly sharply to try to offset that bid on tariffs. So we'll see kind of how that plays out. But again, the dollar also very close to a buy signal here. Now, stronger dollar is monetary tightening. It's going to impact markets as well as the dollar gets stronger. So again, that's kind of another headwind between that and volatility. That's another headwind that we could see a bit more of the market struggle here for the month. And again, as I was saying, February tends to be a fairly weak month anyway. And the combination of these events right now are currently setting up for that month to kind of play out fairly weak here as we kind of work through this. Overbought conditions getting worked off, potential sell signal getting worked off. That's going to take several weeks. So kind of expect now, again, as we talked about, kind of rebalancing risk over the last couple of weeks. Kind of expect a month of a bit sloppy trading here. It's possible, particularly with kind of all these headwinds that are coming in right now. So just continue to manage risk, nothing to be overly concerned about right now. We'll just kind of monitor these situations as they develop and make changes accordingly. But that's what you need to know before the bell this morning. When we come back, we'll pick up and talk more about tariffs, what it means, what the impacts are, try to figure it all out. We'll talk about that next on The Real Investment Show.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
If you thought retirement income was just stocks and bonds, let us help you understand how to rethink your approach. Our first Candid Coffee of 2025 has everything you wanted to know about income in retirement. Saturday, February 8th with Richard Rosso and Danny Ratliff. What else is there besides stocks and bonds? Is your retirement paycheck really diversified? Everything you wanted to know about income in retirement. Candid Coffee with Ratliff and Rosso. Register today at realinvestmentadvice.com. Realinvestmentadvice.com.
Will you be turning 65 in 2025? Happy birthday! But there's a Medicare special enrollment period in your future. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that is right for your lifestyle and budget and avoid those gaps in coverage. Click on the insurance tab at realinvestmentadvice.com today. Realinvestmentadvice.com.
The Real Investment Show.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Real real quick before we get into tariffs. Got to tell you a story. So, I told you we've been remodeling this house. We finally got moved into this house, and so my wife's been trying to finish things up. But the yard on this house was a disaster when we moved in. Like most of it's got really big oak trees all over the house. So there's like no grass in the yard because the oak trees have basically just blocked all the sunlight because they're so heavily. They didn't take care of them before. They didn't, kind of prune them back and those type of things. Let the light in. So we've had tree people come out and prune the trees and let the light in. But, we've had to get with the landscaping company to come out and kind of redo the front and side yards and replace and I told you the other day, we had the previous homeowner who put turf in the backyard. Very poor job of that. So we're having that fixed as well. But so my wife likes to open up the house. And so we've got these doors on the front of the house that open up to the house. And we've got the sliding back door that opens up the whole wall in the back of the house. So she likes to open up the house, especially it was pretty, like this weekend was absolutely gorgeous. So she likes to open up the house and just let the air in and that type of thing. Well, the dogs like squirrels. And because of all these oak trees, we have a massive amount of squirrels that run around. So, we got to be careful opening the doors because the next thing you know, snipers out chasing squirrels in the front yard. So she had this idea, said she got with a landscaper and they're having to repair the porch on the front of the house. And she's like, hey, can we just put a little black fence like around the porch, right? So that way I can open up the doors. And if the dogs run out, they've got the fence right there. And they'll have a gate, on kind of the front. And so, of course, you have to submit all this to the HOA, right? You can't just do stuff to your house when you live in an HOA. You got to have everybody's approval for the HOA. So we submitted the architectural plans to the HOA, and we got a letter back. And the letter says, your plans are approved with conditions. And the condition was no fence. Then again, this isn't like a chain link barbed wire fence. Okay. It's like a small little iron fence in the front, very tasteful. We had a landscape architect design it so it would match with the house and everything else. Right. So we wanted to make sure that, and had pictures drawn so the HOA could understand what we're trying to do. And they sent back this letter. Brent will love this because he's a grammar Nazi. Your plans are approved as is with exceptions, and it says the fence is disinharmonious with the neighborhood. I told you you'd like that one.
That's our word for the day.
Yes, disinharmonious. Not disharmonious, not inharmonious. We had to get it all in there. It was so inharmonious that we had to do disinharmonious to get it covered. I felt like writing them back.
Oh, you should.
I was so close to writing them back, but I just let it go. I'm maturing as an adult. I'm starting to learn to let things go.
So, there's bigger fish to fry.
Yeah. Anyway, so
what are you going to do?
No fence.
No fence.
We're going to put bushes up.
And then put the fence up.
And then put the fence up. It's going to be fine. I told my wife it'll be fine. Don't worry about it.
I did the same thing.
Yeah. Really?
Chicken wire.
Chicken wire?
Behind the shrub.
Oh, that's an idea. I didn't think about that. Yeah. I could just say it was there to help the shrubs.
Exactly.
Sand line.
Yes.
Good idea.
Topiary support.
Topiary support. I like it. I like it. I like this a lot, actually. So anyway, I will send you pictures when it's all done. So it is quite the mess right now. All right, let's talk a little bit about tariffs. So lots of concerns over the weekend, tons of headlines. And again, just be careful who you read, as always. I got tons of emails almost right away. This guy said this. This is, this is the thing that sparks the next massive inflation surge of the 70s. No, it doesn't. This is the next thing that's going to cause the market to crash. No, it's not. It's certainly going to weigh on markets short term, for sure, as we kind of process through this. But markets will adapt to this fairly quickly. And a couple of things are important, right? You also have to understand what the context of the tariffs are in terms of future pressures, right? Are these tariffs permanent? And these tariffs aren't being used for a permanent outcome. At least not yet. Now, it could, but we've already seen him use tariffs twice so far, and apparently Mexico and Canada don't get it. Panama and Colombia got it, right? So, announced tariffs, 25% tariff on Colombia to make sure that they would bring back their illegal immigrants, and they immediately complied and no tariffs on Colombia, right? Panama, same threat. Panama over the weekend terminated their deal with China. So apparently those leaders get what the impact of tariffs are, but apparently Claudia and Trudeau, Mr. Justin, who has now resigned in shame from Canada, don't get it, right? So their immediate response was as well, we're going to retaliate back. Well, you didn't read the tariff announcement, which was if you retaliate, it's more tariffs, right? All he wants is, though, and this is something that'll be discussed, they're going to have calls obviously today between these leaders, is what he's saying is look, I'm imposing a 25% tariff on you to get, so you will take some action to reduce the illegal immigrant flow and fentanyl flow into the U.S. His goal with tariffs is only to help assist with the efforts that we're already doing in the U.S. to stem the flow of border crossings in the U.S. By the way, the number of border encounters since Trump took office has dropped 94%. So doesn't take much, right? Peter Hegseth, who is the new nominee that just got nominated, has just announced basically that he's declaring the cartels as a terrorist organization, something that probably should have been done years ago, but has now declared them terrorist organizations, which means now that the U.S. can take military action against them, against these cartels that are all along the border. But this is all that President Trump wants. What he wants is for Claudia in Mexico and for Trudeau in Canada to take action to help support that. So if you want the tariffs to go away, that's the stick, right? Tariffs are the stick. The carrot is help me. It's kind of like the Tom Cruise scene. You know, help me help you, right? That's all I want. I just want some help here in helping stem the flow of drugs and illegals into the U.S. You know, stop child trafficking, stop illegal immigration, stop drug flow, stop arms flow from Mexico into the U.S., stop gang flow from the U.S. from Mexico into the U.S. That's what he's trying to achieve. You help with that, the tariffs go away. Now, Trudeau didn't get that, right? So immediately his response was to take and to try to target red states more than blue states, but to take alcohol off the shelves in Canada. And of course, immediately Texas Governor Greg Abbott responded that said, by the way, the Texas economy is larger than the entire economy of Canada, and we're not afraid to use it. So Justin Trudeau, again, who has already resigned in shame from his administration, hasn't learned his lesson yet, right? So he's trying to fight this fight that he's going to lose at some point, and the question is only when. So the impact to the U.S., what does that look like? Now, as I was saying earlier, the one difference between this time and 2017 was in 2018, when we did the tariffs. In December of 2017, President Trump had introduced the Tax Cuts and Jobs Act, got that passed, and gave tax cuts to the average American. He then followed that up with tariffs in 2018. So taxpayers had relief to offset the risk of higher prices through tariffs in 2018. Now, while he's talked about, again, as I said earlier, tax relief in terms of no taxes on Social Security, no taxes on tips, no taxes on overtime hours. That hasn't been passed yet. So we don't have that tax. Now, we do have the Tax Cuts and Jobs Act still in effect, right? So we still have that. But there's been no new tax cuts to offset the current increase in tariffs as of now. Doesn't mean that's not coming, just hasn't been done yet. Now, the assumption, though, and this is potentially a mistake by Wall Street and by a lot of the kind of the mainstream media, and let's just use an example of something. So we import lumber, a lot of lumber from Canada. So let's just say that to keep kind of number simple, that, I import some lumber. I import $100 worth of lumber, and now there's a $25 tax on that lumber. Now, the tariffs are not on consumers directly. It's on the importers that bring the product into the U.S. That's where the tariff is impacted. So I'm an importer of lumber from Canada, and and let's say that I import it, and then I'm going to sell it all to Home Depot to sell to you, right? Or however it gets there. So I've got to deal with that tariff as the importer. The question now becomes, can I pass that $25 fee on to consumers? See, this is the issue. See, right now, everybody's assuming that higher prices can be passed on directly to the consumer. Maybe they can. But if you take a look at where consumption is at the moment and look at the savings rate of the average American, how much they're having to spend on credit just to maintain their standard of living, it becomes a much more questionable issue about whether or not those tariffs can be passed on in full, could be some, or none, be passed on to the consumer. We'll talk about the impact of that and where it's going to likely show up and why it is important, especially if you're investing in the stock market. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
If you thought retirement income was just stocks and bonds, let us help you understand how to rethink your approach. Our first Candid Coffee of 2025 has everything you wanted to know about income in retirement. Saturday, February 8th with Richard Rosso and Danny Ratliff. What else is there besides stocks and bonds? Is your retirement paycheck really diversified? Everything you wanted to know about income in retirement. Candid Coffee with Ratliff and Rosso. Register today at realinvestmentadvice.com. Realinvestmentadvice.com.
If you're working and looking to retire soon, a Medicare special enrollment period is in your future. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that is right for your lifestyle and budget and avoid gaps in coverage. Click on the insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
The Real Investment Show.
Are you a financial advisor sneaking peeks at our stuff? Instead of trying to do it all yourself, why not just join the team at RIA Advisors? Our full-service organization can provide you with the support, unparalleled research, and tools for managing your clients' money and honoring the fiduciary pledge of putting clients' best interest first. Don't take our word for it. Talk to the advisors that work with us. Want to come win with us? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors, big enough where it matters, agile enough when it counts.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
One thing that the consumer confidence measures, is that correct? If I say consumer confidence measures?
Squared.
How many measures can the consumer confidence measure? I don't know.
The Real Investment Show podcast.
Dr. Seuss.
The consumer confidence measures investor sentiment about stocks. That's the highest level on record.
Same show, your schedule.
It's amazing. Consumers are super confident about the stock market.
At realinvestmentadvice.com.
At the same time, they go, my life sucks economically, but the stock market, it's all good.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access. Now with the new and improved Before the Bell reports and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So welcome back to the show again, and let's talk a little bit about these tariffs and kind of what the implications are. Again, this is all very, new right now. We'll have to see how this works out. Lots of assumptions, though, right? One of the funny ones I saw this morning is tariffs are going to slow the economy but increase inflation. Well, that can't happen. If the economy's slowing down, that's less demand, which means I can't raise prices, so I can't have inflation, right? So the companies have to eat the tariffs and can't pass it on. So this is the kind of nonsense that gets put out there. So just again, you have to kind of work your way through kind of the reality versus, what these people think of. And again, a lot of classic economists don't really understand consumer choice and the consumer dynamics that drive the actual economy. And this has been a point they've missed for decades, and why they keep making bad policy choices, because they forget about consumer demand and they forget about consumer choices and how consumers react, and particularly when they don't have any money. So, and that's one of the bigger issues right now, as we were talking about before, is that, as a company is impacted by the tariff, they have a choice or not, and that is to be able to pass on that tariff as a higher price to the consumer. And if they can't pass it on, it impacts their earnings and it impacts their corporate profitability. Corporate profitability is one of the things we want to watch very closely here in particular, because corporate profitability as a percent of GDP is at the highest level on record. It is abnormally high relative to historical norms of where corporate profitability should be in an economy. That suggests that corporations over the last few years, the last 3 years in particular, have been able to pass on much higher prices to consumers because consumers had a lot of excess money. That's now gone. Savings rates are now gone. Most of the excess savings are gone. Credit card debt is rising. The ability to obtain credit is becoming more restrictive. Bankruptcies are rising for corporations, in your private space, not your public space. So we're certainly seeing economic stress beginning to form in the economy as all this stimulus money that was injected is now running out. It's run its course. This puts corporations into a fairly tough spot in terms of maintaining earnings and profitability. And one of the big risks that we've talked about over the course of this year is that expectations for earnings this year are somewhere around 18-19% for earnings growth. It's likely not going to be that, particularly now, because of tariffs. If I can't pass that on, which is a real possibility, I'm not saying it's an absolute, because they can't, it's possible they can in some areas, maybe not. But if I can't pass it on, that's going to if my profit margin on a $100 board, as using our example from earlier, was say 20%, and now it costs me $125 for that same board that was selling for $100 and making my $20 of profit on, all of a sudden, if I can't sell that for $105 to maintain my profit margin, I got problems, right? So if I can't raise that price to offset the tariffs, I've got an issue. So this is the thing we need to watch very closely here. And again, two things, and kind of stepping back to our previous comments is also don't forget that this is just stick and carrot. While right now, this is big headline news this morning, markets are going to certainly be hit by it. And again, this is the same advice that we said last Monday. Don't do anything in your portfolio this morning. Just go play golf today. right? Let the market kind of sort this out. Over the course of the day, the markets are going to sort out kind of exactly what they expect from these tariffs. And we've seen these days before where markets open down sharply like this and then rally back to break even or even positive by the end of the day because the markets kind of digest the news and factor it into what they expect for future earnings growth and all that type of stuff, right? So the best thing to do today is not do anything this morning. Don't make any knee-jerk reactions this morning because of this news. Don't go sell a bunch of stuff. Just turn everything off and go do something else today. Tomorrow in the morning, we'll analyze kind of how the process was yesterday. Was it orderly? Was it disorderly? What happened with volatility, those type of things. Were any major supports taken out? Were there any major changes? Then that's something we can start to adapt with. If this is something that's building more steam and we're going to have more, further corrections in the markets, then we can start taking action. But we can do a little bit more logically than we can by just reacting to the news this morning. And again, wherever the market's open this morning, that's likely to be near the lowest point of the day at the open, and then we'll see kind of where we go to from here. Also, we'll want to know, how do bonds react today? If bonds rally today, then all these concerns about inflation from tariffs, the bond market is telling us probably not the case. If bond market sells off today, then maybe inflation's a bit more of a concern. So we need to watch the bond market as well for a tell as to the impact of tariffs on economic activity, and particularly future economic activity. Is this the game changer for inflation? Maybe it is, maybe it isn't. The bond market will tell us, but we'll know that by the end of the day. So again, this is why just, today is a good day to do nothing. Just kind of wait, see this out, go do something else, take your mind off things. Don't look at your portfolio every 2 minutes trying to make determinations of stuff, because you're likely just going to get yourself into an emotional swivel and you'll wind up making a bad mistake. We've seen these type of actions before. But again, we've talked about this, is that when markets are overbought, as they were, things like DeepSeek or tariffs, these kind of unexpected events, kind of take the market by surprise. And you've got to let the market kind of work through the surprise factor. See where buyers and sellers start to, negotiate a point. Because again, the market's just buyers and sellers. Now, you've got, a few people out today that are making, talking points about tariffs and other things, but the market is going, the millions and millions of minds that make up the market are going to do the analysis today. So we'll want to pay attention to what that collective agreement is. And that'll tell us a lot about where the market is and what happens next. So again, just be a little bit cautious today. Now, back to just talking about tariffs. The issue with tariffs, again, they're a lot of, again, kind of headlines running around. Everybody's kind of throwing out their own, kind of 2 cents worth on tariffs this morning. Goldman, this morning, good example. They're like, hey, these are going to be short-lived. There's going to be a negotiation met between Mexico and Canada at some point, probably the next few days, maybe the next week, and then this will all be over. Bank of America is like, no, this is terrible. They're going to stay here forever, and this is going to cause a major economic reversal. And look, that's a real possibility. There is ample evidence that the economy is actually much weaker than what recent headlines have suggested, particularly on the employment space. I actually was working on a report over the weekend for next Friday and going through some employment data. And once you dig below that surface on the employment front, it's not nearly as robust as the Fed is looking at. And again, in the recent meeting from the FOMC, Jerome Powell said, well, the employment remains fairly stable. It's good. It's healthy. Healthy employment. Everything's fine. It's really not when you look below the surface. And very likely the Fed is going to wind up on the wrong side of this economic equation at some point in the not so distant future. And particularly now, if these tariffs are imposed and they do remain for an extended period of time, and that's going to have impact on companies, because if I can't pass on the tariff, right? So here's two potential outcomes from tariffs. Let's assume I can pass it on. All of a sudden, everything we buy from Canada and Mexico goes up 25% in price, just assuming $100, right? So everything's $100 from Mexico. So the actual $25 is 25% is $25 on everything, right? So everything goes up 25% from Canada and Mexico. Well, consumers have a choice. I don't build the deck on my house, so I don't need lumber from Canada. I stopped drinking alcohol, so I don't need Canadian alcohol or Canada, ginger ale from Canada, right? The things that we import from them. Same thing from Mexico, right? I just don't have guacamole on my tacos, right? So consumer choice, all of a sudden, they stop purchasing certain items, or they just can't afford to purchase them because they're 25% higher. So if I can't sell those products as a company, I've got a choice. I've got to still sell them. I can still sell them if I sell them at the same price that I was selling them before. So I've got to eat the 25% tariff, which is going to impact my earnings and my profitability. So in order to offset that risk, I have to do what? I've got to reduce other costs in my business, which means I need to lay off workers, cut salaries, those type of things, which increases the unemployment rate in the U.S. So that's the risk the Fed faces if tariffs stay for too long. So the risk of recession is certainly back on the table, depending on how things work out. But again, expectations are that these tariffs aren't going to be around for very long. Again, in the case of Colombia, they lasted 10 hours. So we'll see how how smart Justin Trudeau is and Claudia and Mexico are in terms of their negotiating abilities, because that's all this is. It's just a negotiation. All right, we'll come back, wrap up the show. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
If you thought retirement income was just stocks and bonds, let us help you understand how to rethink your approach. Our first Candid Coffee of 2025 has everything you wanted to know about income in retirement. Saturday, February 8th with Richard Rosso and Danny Ratliff. What else is there besides stocks and bonds? Is your retirement paycheck really diversified? Everything you wanted to know about income in retirement. Candid Coffee with Ratliff and Rosso. Register today at realinvestmentadvice.com. realinvestmentadvice.com.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. So anyway, tomorrow I'll have an article out. When I get home today, I will kind of run the technicals on the market, see where we are, look at support levels, those type of things. We'll do some kind of highlight analysis on tariffs and just try to put together a bit of structure for an article tomorrow. So I'll have that out for you in the morning, just kind of, how this is going to, and again, we're not going to focus too much tomorrow on the impact of tariffs on the economy, but more on the markets. What does this mean for earnings? What does this mean for corporate profitability? What does this mean technically for the market as well? Again, we'll see how the markets, kind of react today. Right now, futures are down about 660 points on the Dow. S&P's down about 100 points at the moment. The Nasdaq's down about 400 points this morning. So it's going to be a fairly sharp down open. We saw this on the morning last Monday with DeepSeek, and we had that sharp sell-off in the morning, and then markets kind of recovered in the afternoon. So we'll see if that occurs today. And again, this is what I was saying earlier, just go do something else this morning. Go get a cup of coffee, go take a walk, turn off the TV, turn off your portfolio analysis, just turn it all off this morning. Don't even pay attention to it. There's nothing you can do about it right now. And then once this kind of settles out over the next few hours, we'll go from there. A lot of stocks are going to get deeply, deeply oversold this morning. There's going to be some buying opportunities in here as well. So we'll want to look for those where stocks have really gotten beaten up on a short-term basis, and you get an oversold condition that provides you a good entry point. Again, these are opportunities you won't take advantage of. Again, we have a lot of earnings out this week. So that's going to be moving stocks regardless of what is happening with tariffs and everything else. So, you may have a stock down this morning, and this, after the bell today, Palantir announces great earnings, and you sell Palantir. I'm just an example. You sell Palantir this morning because it's down 3 or 4% at the open because of this tariff news. And then they report whopper earnings after the bell, and tomorrow it's up 10%, which it can do. It's done it before. So now you're kicking yourself for making a reaction ahead of earnings. So again, earnings is going to drive markets regardless of tariff news and everything else. Speaking of earnings, we've got Palantir today, Clorox today. Tomorrow is Alphabet, Google, AMD, Amgen, Apollo, Chipotle Mexican Group, Electronic Arts, Juniper Networks, Pfizer, PayPal, Snap, Spotify is all tomorrow. On Wednesday is Disney, Aflac, ARM Holdings, that'll be another one that kind of focuses on the AI space. Ford, Toyota, Viking Therapeutics, and on Thursday is Amazon, Eli Lilly, Affirm, which is the buy now pay later company, as well as Hershey's, Peloton, which is still dead money, Pinterest, Philip Morris, and Roblox, all reporting on Thursday. So again, lots of earnings this week. They're going to be moving markets kind of across the board. So again, that's what I'm saying. Just step away this morning. It's going to be a little bit stressful, but you just don't want to make any emotional mistakes. And then we'll come back to it and we'll figure it out tomorrow. Again, by the end of today, as I'm writing this article for tomorrow, I'll have a little bit better handle on kind of exactly what's going on. We'll also have, there's going to be calls today between Mexico and Canada and Trump. So maybe one of them will say the right things and go, okay, you know what we're doing? We're going to help you and, put these tariffs on, pause the tariffs for a month or two and let us show you we're going to help you. And then you can decide from there. So, we'll see what happens. So things can change very quickly in this environment, particularly when tariffs are being used as a negotiating tool rather than an implicit income generator. Now, again, Trump has talked about using more tariffs and reducing taxes, getting rid of the IRS as an example. So you don't pay personal income taxes, but using tariffs and excise taxes to generate revenue for the U.S. We're not there yet. That's not what he's talking about at this point. Right now, these are specifically stick and carrot tactics for reducing immigration flow into the U.S., getting rid of criminal, illegal immigrants that are coming across the border, particularly from Mexico through gangs, cartels. Reducing the flow of child trafficking, drugs, guns, et cetera, that are particularly coming across from the cartels on the southern border. That's the big reason for this. This is all stick and carrot negotiation moment to secure the border. That's his priority number one. Where he goes to after this is going to be a different story. right? That'll be something else we'll look at when we get there. So my point, again, just kind of going back to what I said earlier, just patience today. Let this sort itself out. This is all stick and carrot at the moment. We'll see how the responses are, see how the markets take it. Technically, we've got some really important support levels that are going to come up very quickly. If the markets can hold those support levels, we find buyers that step into the market, probably no big deal. If we start taking out those support levels, we're likely into a larger corrective cycle, which is very possible, given that markets are very extended from long-term means. On a weekly and monthly basis, we're trading very elevated among long-term means. We're at tops of trend channels on a long-term basis. There is a reasonable expectation that at some point we're going to have a 15-20% correction in the markets. Is this the beginning of that? Possibly. We don't know. We'll figure that out. But if we start taking out important support levels, we will start reducing exposure quickly in portfolios. But we don't want to knee-jerk react to it and then make a big assumption, eliminate a bunch of risk in the portfolio today at the open, and then 2 o'clock this afternoon, Trump comes out and says, hey, Canada and Mexico agreed to help us secure the borders and no tariffs. And then this market rallies off 500 points. And you're sitting on your hands going, well, what just happened? Right? This is the problem of reacting too soon and why we just need to kind of wait this out and let the markets tell us where things are going to go. Okay. One other thing. So talking a little bit about long-term, and this was kind of the subject of this weekend's newsletter, by the way. If you haven't read the newsletter, about two things. Friday, I'm flying to Canada to pay 25% more on everything because I'm the keynote speaker at the Money Talks conference in Vancouver. So there will be no newsletter this coming weekend. I won't have time to write it and get it out because I'll be on a plane most of the time. So I will get back to the newsletter, I promise, in the following week. But just won't be able to get one this week. But we talked about this weekend, particularly about the clock has no hands. And what that means is that when you take and it was interesting because last week I wrote specifically saying that the markets had returned back to a very high level of bullishness. We had moved the fear greed index back into greed categories. We had moved technical composites up into very overbought levels, and we just needed a catalyst for the sell-off. And the point of the article was talking about the fact that we had set the market up in a position for a bit of a correction because we'd gotten very bullish very quickly post the inauguration of President Trump. And so, not surprisingly, it's kind of like what's going on right now. And I put a quote in from Jason Zweig, who writes for the Wall Street Journal, and he was quoting he pulled a clip out of the book called Super Money. If you've never read the book Super Money, it's a great book to read, especially if you are an investor. But the quote says this. He says, "We're all at a wonderful ball where the champagne sparkles in every glass and soft laughter falls upon the summer air. We know by the rules that at some moment the black horseman will come shattering through the great terrace doors, wrecking vengeance and scattering the survivors. Those who leave early are saved, but the ball is so splendid no one wants to leave while there is still time, so that everybody keeps asking, what time is it? What time is it? But none of the clocks have any hands." And so the point of that is that that's where we are in the markets, is that markets are very overbought, very extended on a long-term basis. And again, I showed this chart in particular at our Economic and Investment Summit, which is a dual layer chart. It shows, one, the deviation of the financial markets from their long-term historic exponential growth trend. So that's, so when you start looking at the market, the stock market is trading 147% above its long-term exponential growth trend. It is one of the highest levels on record ever. Valuations are at 37, 38 times earnings right now. We've had a very sharp increase in valuations over the last year because earnings didn't keep up with the price. So we had what's called multiple expansion. Price was going up without underlying earnings increasing enough to pace that. That's at one of the highest levels on record as well. So again, from a market perspective, Markets are very richly overvalued. They're very deviated from long-term means. You are going to have a correction at some point. Now, that doesn't mean this year, doesn't mean next year, doesn't mean 5 years from now. It can take a very long time for these things to happen. This is all monthly data. So these overbought extended conditions can last for a very, very long time. But all it takes is something to disrupt the belief that the markets can only go up, right? There's this kind of this overall riding belief right now that number only goes up. So you just invest in the markets because number goes up. That's why you invest. That will be impacted by something, some change of event, some context, some issue. Is it tariffs? Maybe, maybe not. Is it a financial event? Maybe, maybe not. We don't know. But at some point, something will cause a mean reverting event in the markets, particularly when you have such a very large bias to being long equity risk, particularly in the markets right now. The problem, as we go through in the newsletter this weekend, if you haven't read it, is that we don't know what time it is. We just know that right now the ball is awesome and nobody wants to leave the party. It's all about FOMO, right? We're all in this. We just have to understand that at some point we need to leave. We just have to wait for the right signals to get there. And right now we just don't have those signals yet. But anyway, that article on the website as well, realinvestmentadvice.com. Make sure to like and subscribe to the YouTube channel. We certainly appreciate it very much. And we'll be back tomorrow. We'll analyze what happens today. Tomorrow we'll make some decisions, what we got to do next. And we'll go through this together. Y'all have a great day.